Hello, everybody. Happy Wednesday, I think it is. The internet is abuzz and all excited about China and Bitcoin. And everybody's asking, could this drive a new Bitcoin bull market? And that's really what I'm going to examine here with you all right now. Just my opinion, of course, and delivered in an edutainment-based way. So the story everybody wants to dig into right now is, the Hong Kong, their equivalent of the SEC, I think it's Securities Future Commission or something like that, is looking to license a whole bunch of exchanges to serve retail investors for crypto, which is big. Now, I think initially it might be for the equivalent of accredited investors in China or Hong Kong. I'm not sure exactly how much that is. But again, this looks like it could all launch pretty soon, like June 1st. And a lot of people are making tracks. But let's dig into a little bit about what kind of that means. So if we look here, this is how Hong Kong wants to be the new global crypto center hub. And a lot of people believe this could drive another Bitcoin and ETH pump around the corner as China secretly pushes into Hong Kong for crypto. Now, reports suggest, I think, that China has been secretly backing Hong Kong's ambitions to become not only the crypto hub of Asia, but also the world. They see what's happening in places like Dubai. And officials from mainland China have been visiting Hong Kong to watch the developments in the region's crypto landscape. And while China continues to maintain a strict crypto ban in the mainland, it seems to be using Hong Kong as a testing ground once again to get into crypto. And businesses from Chinese mainland and overseas are planning their return to Hong Kong, thanks to some of the activities happening in the United States right now and other places. Again, as we mentioned before, you can't put the toothpaste back in the tube with crypto. Let's dig a little bit deeper. The big question people have is, could China spark a new crypto rally? So let's look into exactly the history and everything else, and some of the macro elements that could drive this as well in China. So, for example, here is from Bloomberg. China ramps up economic support with biggest ever cash injection. The PBOC, I think it's People's Bank of China, adds a net 632 billion won with reserve repos, and Beijing is determined to keep cash supply ample. They saw what happened when cash is not ample to the real estate market. We will talk about that in a minute too, because typically the Chinese are avid savers, and they've been buying real estate for a decade plus, not only in China, in these ghost towns, ghost villages, whatever, but also all around the world, places like Vancouver and other major cities. In fact, I think it's 1/3 or 40% of all sales of Australian real estate in major cities in Australia are done by the Chinese too. But let's look at the history of China and Bitcoin and crypto, because it is a complex relationship. So you never know what China could do. They could say, yes, Hong Kong adopt Bitcoin, and then a year later they could slap them down, but we'll see. So a little bit of history here. Initially, the country was very receptive to the idea of digital currencies, and in 2013, PBOC banned financial institutions from handling Bitcoin transactions. 2017, China banned ICOs. That's how you raise money, like an IPO, but for crypto. In 2019, the Chinese government took further action against cryptocurrencies, announcing that the PBOC would launch its own digital currency. That's the digital yuan. And in 2021, China banned mining. People thought, whoa. And I think Bitcoin was at 60K at the time. And that really hurt the market. Not as much as some other things that happened since then. But, if you look at the sequence of events and the timing, they're kind of a little bit unusual. Now let's look at an interesting correlation here. This big thank you to Sanjay for sharing this one. And the increased correlation between Chinese stocks and Bitcoin is kind of uncanny, especially this year so far. And Bitcoin is increasingly correlated with the Chinese stocks. And by the way, guess what? Chinese stocks are entering a bull market right now. I covered that a couple of weeks ago. And I've got my two favorite Chinese stocks, but a lot of people are now beginning to step in the water, and the Chinese equities have become the most crowded trade, which is normally a very bullish sign as well. So again, I like to look at all angles to find out exactly, could this happen? So one of the key things is the Chinese real estate slump continues. Chinese private real estate developers started sliding into distress more than a year ago. We covered that also in great detail. And the government encouraged state-owned property companies to step in and take over their ailing peers' projects and assets. And that call, I think, has gone largely unheeded, and a big reason why the country's housing market remains in the doldrums. And the Chinese are, as I mentioned, avid savers, and they used to park all their cash in real estate. And probably still do a lot of it, but now that the Chinese market is so beaten down, they will be hungry for an alternative. And wait till the end, I'll show you how much money actually is floating around there from the Chinese. Let's talk about debt as well. We know the world is built on debt. Now, I believe China are definitely playing the debt game as well. Why not print fiat to infinity? Everybody else is doing it. Why not jump in too? The Chinese economy's debt ratio will likely, apparently, maybe slow in 2023, but not after that big pump we just saw of that huge amount, nearly $90 billion worth into the system. And there are growing concerns, however, about the sustainability of rising levels of local government borrowing. And that all ties back into the whole real estate mess that they have right now too. But the macro leverage ratio, or total debt as a percentage of GDP, is now 273%, which is extremely high. It's on par with some other places that have very, very high related ratios. And we'll see what happens. But the increase in China's debt to GDP ratio was mainly led by slowing economic growth, according to certain reports. But anyway, they are increasing their debt, but they're also trying to spur the economy. And that's why many people think the Chinese market is heading into a big, big bull market. Now, let's look at some macro elements too. After plunging 84% for the peak, the rate to ship a 40-foot container from Shanghai to Los Angeles have stabilized for now at that same level, about $2,000. Remember, down 84% is stunning. But what this means is now the Chinese can start shipping their goods to help fuel the bull market to places like the US, big market. So that's good. When it was extremely high, it was extremely prohibitive to ship a lot of materials. In addition, many believe there will be a massive resurgent oil demand out of China because of the new growth in the economy post C-19. And the big question is, oil is a commodity, but is Bitcoin a commodity? And if so, there could be a correlation there too. So many people are calling for maybe a $100 oil price again because of Chinese demand. But some people think, maybe not so much. But I'm beginning to lean on the side of, yes, at least $80 oil based on China's demand. Let's talk about the money. Obviously, follow the money. Let's find out exactly how important Hong Kong is. So here, this article, China's rich skirting Hong Kong to seek asset safety elsewhere. Again, that's why the Chinese buy a lot of real estate in places like Vancouver, etc. But more than half of Hong Kong's estimated private wealth of over $1 trillion is from mainland China. And that's where they park their money. And apparently, Hong Kong has been bleeding that money to other markets around the world. But of course, China wants to keep it all as much as possible. That's why I believe they're creating this new regulation. They have a separate legal system in the Hong Kong territory, as well as a dollar-pegged currency. And this is all there to prevent, I think, both capital and talent flight. The Chinese are smart enough to know that when there's a big disruptive technology out there, you got to be part of it. You can't just ban it because people will find a way. Now, let's look at a couple more little elements. This is just a quick check-in on Bitcoin. Realized price right now, the price is exactly $24,050. People are saying, we'll reject it so fast off the 25K level so many times. But that's okay. Remember, not too long ago, we were 50% lower, like literally 6-7 weeks ago, 50% lower. So, as in, it has gained 50% in the last 6 or 7 weeks. Now, if we look at a couple of things here, this chart shows the short-term holder realized price is in flipping distance of realized price, Bitcoin realized price, and paramount. This is so important here. The major reason I mentioned 24K is where we are right now. But if we consolidate and fall back down to key levels, it's important, very important, that we hold that $22,200 level as short-term holder increases its cost basis and gets above the long-term holder cost basis. And a quick reminder, the short-term holder realized price is about 19,590, realized price is about 19,867, and the long-term holder realized price is 22,200. So again, that 22,200 is a critical level to keep. But don't be too obsessed with the long-term prices, but that, I believe, would be a level. If that 22.2 was broke, it could go lower. So hopefully it'll stay up. And it looks like it is holding pretty strong as well, despite the last 10 days we've had. Final little note. This is how China could not stop Bitcoin in the past. And you got your Charlie Mongers out there trying to stop Bitcoin, etc., etc. It's kind of interesting because Charlie is obviously legendary investor in the past. He's also a big China fan. He's so proud of China banning Bitcoin. And he says things like BYD are far superior to Tesla. It's like head scratcher, total head scratcher. But now if China embraces Bitcoin, will Charlie change his stance about being so proud of China? Who knows? Anyway, all we know is Bitcoin can't be banned and the world needs it. So with that, everybody, thank you so much. I hope this answers your questions. I think given the amount of money that China have, given the need for a savings asset, now real estate is no longer that asset in China, I think this could have a huge impact on Bitcoin price. So with that, let's watch this space. Watch that key June 1st date. Summer can be dodgy in markets, but hopefully things will go okay as we go forward. Thank you so much. Don't forget to hit the like, get me out of my shadow ban, and subscribe if you haven't.